Hi everyone and welcome back to the channel. Today is a fun one. I'm going to be revealing my entire $212,000 Questrade portfolio. I'm going to be going line by line, item by item, kind of discussing the story behind each one. I'll also, at the end of the video, I'll be going over what's wrong with my portfolio and what I'm going to do in the future to fix it. Before I get into it, I'd just like to throw in a disclaimer. Please do not try to copy my portfolio. Do not buy the stocks I have. You'll see why. Right now I'm down 35,000, almost 39,000 Canadian dollars in my portfolio. I like risk. I do engage in speculation. I'm not interested in an average boring portfolio with average returns. I'm looking for more. Again, I like risk. I think it's fun. The speculative part is kind of fun to me. When you're young, relatively young, I do think you should take on more risk. When you're older, close to retirement, maybe go into something more stable, something like bonds or fixed income that'll give you something, you can accurately predict what you're going to get every month or every quarter. So with the stock market being down like 30-40%, I do think it's a good time to reveal my portfolio. Again, like I mentioned, I'm losing money on this, so no one will be too gung-ho on or too excited to jump onto my portfolio. One last item before I get into it, please thumbs up the video and subscribe to the channel. Leave a comment on any other topic you'd like me to cover. With that being said, let's get into it. As of today, it's end of May 2020. My portfolio is $212,600. I am currently at a loss of around $39,000. Let's go into the first stock. Apple. I have 17 shares with a market value of $5,421. This is in US dollars. This is currently up. Very good news. Apple's been doing really well. They kind of hit, I think they hit like 218 a few weeks ago and they rebounded. This is almost near their max. I think the company high was around $330. Moving on, Air Canada, 137 shares for a total market value of $2,294. This is part of the speculative part of my investment. I made a video a few months ago when Apple was around $27 as why I wouldn't buy it. I still think it had further to go. I do think it bottomed out around $12, $13. I jumped in at 14. We'll see what happens. I'm probably going to hold on to this for the end of the year. If I don't see any movement, I'm probably going to let it go. If you can see here, it shows Aurora Cannabis showing up twice. This is because I own some shares in my TFSA, but because I was maxed out, I purchased more in my margin account. So it does show up twice, but that's just because it's two separate accounts. The story behind the weed stocks, I've never made more money, I guess percentage-wise, than I have with weed stocks. I guess in total, I was up 300-400%. I sold all the weed stocks, making 300-400%. And then when I saw them continually increase, the original principle I had, I put it back in. I had FOMO, the fear of missing out. I thought it would keep going up. I didn't want to miss the train. So I bought back in, which was a huge mistake. And you can see now, I think I have around market value $2,900, but I am down almost $6,000 on Aurora Cannabis. And you'll see the other weed stocks I have, those are down as well. Next one, Alaris. This is one of my more speculative ones. This was down, I own 154 shares, market value 1,500. This is probably my worst purchases. It's been down before this whole stock market crash. I think I didn't do enough due diligence. A few weeks after I purchased it, I believe they cut their dividend and then the stock price tanked. So I've kind of been holding the bag ever since. Alta Gas, you can see I own it twice here. I guess a total market value of $3,000. This is a utilities and an electricity natural gas company. Another one I didn't do my due diligence on. It was funny. These two companies are probably the worst investments I've ever made. They were down way before this market crash. Afria or Afria, I have around 60, what is this, like 1,200 shares, 1,300 shares for around $7,000. Again, this is, I think I made the most on Afria. I made around 400%. I saw it continually increase and I bought back in. Like, look at the price I bought back in at around $10. This was a huge mistake. I will learn going forward, but overall, if I think about weed stocks, I am up, but I think that's a poor way to look at it. This was a bad decision. These two companies were a spin-off of Afria. They just gave me, what is this, like 17 shares, and this is $5 worth. I don't know why I got these, but it was a spin-off. You automatically get it. The same thing with Brookfield Infrastructure. BIPC was a spin-off as well. As you can see here, it kind of offsets each other. This is total, what is this, 73 shares for market value. If I net these out, around $70 US. BMO. This is one of the first bank stocks that appear. I am deep in Canadian banks. I am a heavy believer in them. I do think they will be doing well in the future. They're almost too big to fail in my mind. I hope I'm not proven wrong, but they pay good dividends. I have around, this is $12,600. I am currently down around $1,700, but I've had these for so long. They pay quarterly dividends. I probably never sell the Canadian banks. I do think BMO will come back, and I hope I'm proven right. BPY, it is one of the REITs. You'll see this is one of many REITs that I own. Around 300 shares in my margin and TFSA account. Some are, okay, it looks like I bought when it tanked over here. I'm up 200 here, down 2,000. No big deal. Market value around 4,300. They do pay monthly dividends, and I will be holding on to this company. I do believe in Brookfield. Next, Choice Properties, the best performing REIT in my mind that I've seen during this market downturn. I have around $12,000 invested in it. I owned shares of CREIT before, but then Choice purchased CREIT, and instead of taking a cash payout, I ended up just taking the shares of Choice. That's why I have so much invested in. Otherwise, I wouldn't have put around $12,000 in a REIT. Moving on, CIBC. I have $7,000 in CIBC. This is one of the more, I guess it's the worst performing of the big five Canadian banks. They're heavily invested in like Canadian mortgages. That's why they got hit hard during this market downturn. But I ended up purchasing some shares where the yield was around 8%. I still believe in this company. I believe in all Canadian banks. I am going hard, and I hope I'm not proven wrong. We'll see what happens. Canwell. They produce building materials and home renovation products. Along with AltaGas and Alaris, one of the worst investments I've ever made. Like, I guess it was only $1,500, but as soon as I purchased, within a few weeks, the dividend was cut, the shares tanked, and then I've been holding the bag ever since. DLR.TO. I purchased this strictly to make a Norbert's Gambit video, which is an example of how to exchange Canadian dollars to US dollars with no exchange fees. So this is the only reason I purchased this. You'll see a new video coming out in this in a few weeks. Exchange Income Fund. This is an acquisition-oriented company that focus on aerospace and aviation. They pay monthly dividends. I have around $6,000 here. Canoe. Canoe is a closed-end fund that dishes out monthly dividends. They have a low management fee, around 1.1%. The yield is currently very high. I'm hoping they don't cut their dividends. So far, they're holding strong, and I have $2,000 in it. Emera, it is a utilities and natural gas company. You can see the utilities are doing really well here. You'll see Enbridge, Emera, and Fortis. I have around $4,500 in it. $700 gain, not bad. Enbridge, 465 shares for a total market value of $20,400. I went deep on Enbridge. You probably shouldn't be this invested in a company. When my portfolio, this is around 10% of my portfolio, I do believe 10% in one company is too much. Even though they've been increasing their dividends every year and they have a strong, stable dividend, maybe 10% in one company is a little much. First Capital. I may or may not have worked at this company in the past. I may or may not have created the financial statement, so I can't say too much other than I have around $6,000 invested. First National. This is Canada's largest non-bank lender of commercial and residential debt. I currently have 141 shares for $4,000. Fortis. another utilities company holding strong. 88 shares for a market value of 4,500. I'm up $500. Not bad. HOU, this is an oil ETF. When oil tanked to around zero or negative prices, this was one of my speculative purchases. I put in around $900. It hasn't been working out so far, and I'm down $500. Not bad. Inner Spirit, I decided to try my hand at penny stocks, and no idea why I did this. This is, again, why you shouldn't copy what I'm doing. This was my speculative purchase. I wanted to dive into penny stocks without having done enough research. I bought 500 shares at 35 cents. I purchased $175 worth, and then it went down to 14 cents. So I'm only down $100, but I'd rather not have done this and allocated the money somewhere else. Johnson & Johnson. You'll see a lot of these US companies. I like putting in 2,000 US. It just gives me a good buffer. It just, for my mind, for some reason, I just like putting down 2,000. I do want to go in more in Johnson & Johnson. 13 shares, only $2,000 worth. Killam Apartment REIT. This is another REIT. They lease 2 apartments. They have monthly dividends. I purchased this one. I do believe in the company, but I also think it's ripe for I think it's ripe to be bought out. I may or may not know something in the industry because I am in the REIT industry, but I do think this will get bought out. That's why I'm holding on to it. I'm looking for a big premium on this share price. Coca-Cola, increasing dividends for around like 55 years, I believe. 43 shares, $2,000. I do want to increase this. McDonald's, 11 shares, which is funny, $2,000. I do want to increase in this. Manulife, 242 shares, market value $3,900. They do pay quarterly dividends. MCAN, this is a mortgage REIT. All they invest in is mortgages. I have 393 shares. My market value is $4,600. They cut their dividend, and that's why these shares tanked hard. I'm not sure what I'm going to be doing with this. I'm going to have to review some of their press releases and their financial statements. I might have to rethink my decision to go so hard on a mortgage REIT. MPLX, it is a energy and infrastructure company. I have 73 shares, around $1,400. This is one I might have to let go. It hasn't been performing really well. Namaste. Well, Lord knows what I did with Namaste. I think I purchased this. I started swing trading Namaste 3 years ago when it first came out, when it was a couple cents, and made huge gains. When it continued to increase, again, my fear of missing out kicked in. I bought 1,600 shares at $2. It increased. I think it went up to $3. I should have sold, but I thought it would go to the moon. And now it's down to 41 cents. Another one of my speculative purchases, and it's biting me. New Residential. They've recently cut their dividend, but I only had 78 shares, around $1,300 worth. So I am down over 50% on this. Northwest REIT. I may or may not be currently working at this company, so I can't say anything other than I have around $12,000 in market value. Northwest. Moving on. Organic Garage. This is at the same time as Inner Spirit. I was dabbling in penny stocks, so I put $1,000 in, and it is now 9 cents a share, where I bought at 39 cents. I'm down $800. I will not be trading penny stocks anymore. Lesson learned. Omega Healthcare, 71 shares, around $2,100 US. This is the US version of like Northwest is in Canada, but it's a lot bigger. They pay quarterly dividends in healthcare. You can see they're up. They're doing really well. TransAlta is a utilities company. You can tell some of these bigger utilities ones are doing really well. 347 shares, market value $4,800. Royal Bank, 100 shares. What is my market value here? 9,000, 8,000? Royal Bank is the biggest company on the TSX. I think Spotify might have beat it, but Royal Bank, the safest Canadian bank you can get, decent dividend. I think I'm averaging 5% a year, and they pay quarterly. I am holding on to this. This is a lifer. Starbucks. This is the only time you'll see me purchasing Starbucks. That's a slight jab. I own 25 shares around 2,000 US dollars. Oh look, they're up $5. I'm up $5, which is half a cup of coffee. Slate, 630 shares. I invested around 5,000. It's only worth 2,400. I'm down around 50%. When I saw the share price slowly decreasing and the yield increasing, in the back of my mind, I kept thinking, the dividend is going to be cut. The dividend is going to be cut. Get out now. But I didn't want to get stuck with losses. I kind of had blind faith with the company. They cut the dividend. I'm down 50% now. I'm not sure what I'm going to do with this company going forward. I do have to rethink this part of my portfolio. My favorite company, I don't know why. No, second favorite company, Smart Centers or Smart REIT. I purchased this company back when it was called Callaway, before their acquisition. I think I purchased this in 2012. That's when I started investing. This is the first company I've ever purchased. 285 shares, around 5,800 market value. They pay monthly dividends. I do believe in this company. They own a lot of good plazas. You drive by them, you see a little penguin all the time. I like this company. I'm holding on to it. I had it when it was first called Callaway, so it's interesting to see where it's come. TELUS, 300 shares, around 6,800. Oh, I'm up $35 on this. They recently did a 2-to-1 stock split. I think the share price used to be around $44, $45. They did like a 50% stock split, so that's why you see it's around $22 right now. I'll say this is my favorite company, TD Bank. I have way too much in TD Bank, around $17,000. They increased their dividends ever since I've held them. I think I've held it for around 6 years. They increase 9 to 12% a year. I can show you an example in my next video, but they've been increasing consistently. I'm very happy. I do believe in this company. They've been expanding into the US. This is my favorite stock that I own and my favorite Canadian bank. Lastly, Canopy. This is the only weed company that I didn't sell when it went high. So I had 100 shares at $28, which is kind of high. But if you think about the share went to 66 when I should have sold. I really did believe in this company so much. I didn't sell. I had a big gain. I'm not doing terribly now. I'm up $100, but if I had sold it at the peak, again, like hindsight is 2020, so I don't really want to talk about that. But yeah, missed opportunities. Well, that's it. That's my portfolio. Keep in mind, this is only what I have in Questrade. I have an RSP with TD with around $30,000 in it, but that's purely invested in their aggressive or high risk portfolio. I chose to see what their robo advisors can do. And to be honest, ever since this like market downturn, my RSP hasn't decreased a bit. I'm not losing anything on my RSP. I don't know what the robo advisors are doing, but the algorithms are working and they're doing much better than my portfolio here. But that doesn't mean I'm going to put all my money into the robo advisors. I still like my stock picking. But back to the stocks. What do you notice about this portfolio? What do you notice about my portfolio? I own too many stocks, around 43 companies. I'm having trouble keep track of every single one. I'm having trouble analyzing all their quarterly reports when they come out. And you can see some of my analysis went by the wayside and the companies aren't doing well. I'm not invested in too many blue chip stocks, the safe ones. I'm too invested in utilities and I'm too invested in real estate. You know what? I think I'm too invested in the financial sector as well. I think going forward, I'm going to reanalyze my portfolio. The companies that weren't doing well pre-market downturn, they're not going to be doing well going forward. I've held on to them for too long. I need to realize those losses, take those funds and buy something else. What my portfolio is also missing is ETFs. Going forward, I'm going to be purchasing index ETFs. I think it's time to let someone more knowledgeable than me manage my funds. Keep in mind, this is about 50% of my portfolio. Like if we go back to the very top, I have around $34,000 in cash here. And then in my TD account, I have around $170,000 in cash. I haven't decided what I want to do with this cash yet. I might go more into stocks. I do want to buy another real estate property. I am a realtor. I know it's annoying. I am biased towards real estate, but it's my thing. I do enjoy it. I do believe in real estate over the long term in Toronto. The reason why I haven't jumped into anything yet, I do like the idea of being my own boss. So I do want to use this money to invest in myself in the future. I do want to start my own company, use this cash to invest in myself, but obviously that's a work in process. Thanks for putting up with my rambling. I know this wasn't heavy in learning. I think the only thing you learned was with what not to invest in, and that's don't do any speculative purchases. Please check out my past videos. My past 2 videos, which I really liked on dividend investing. I do a part 1, part 2, and tune in to my next video where I break down my monthly income from this portfolio, my monthly income from all these dividends. It'll be a slight repeat because you'll see the companies over again, but I'll go line by line and show you everything that's directly come into my Questrade account. So tune into that one, and bye for now.